Hi, Chris Barker with Maya Wealth, and I'm here to help you make the most of some of your opportunities under the current tax laws. So there's a new administration in Washington. That's no secret to anybody. But Democrats also control the House and the Senate. This makes a much easier road for Democrats to repeal some of the Trump administration tax cuts and make some new changes of their own. So what's next for taxes? Both parties have spent trillions of dollars on COVID relief by printing money and racking up national debt. And with no end to the increased spending, unfunded mandates in sight, the government has little choice but to raise taxes. The Biden administration has been very vocal on raising taxes or lowering deductions, but they likely won't take effect until 2022 once COVID is securely behind us, hopefully, and once the government is confident that the economy is growing at a good pace. In this video, I'm going to talk to you about some easy steps that you can take before the proposed tax changes take effect. So what can you do? First, if you're a high income earner, you're likely to be affected the greatest. If that's you, 2021 might be a good time to consider accelerating income. We all probably wish we could accelerate our income. If you're a business owner, generally you have a lot of flexibility to do so, taking maybe K1 distributions or distributions from the business earlier, and instead of taking them in Q1 of 2022. And there's some other ways of accelerating income. I've had some of my clients that were able to prorate and fast forward a portion of their bonus that might get paid early 2022 into 2021, just to push some of that income into a potentially lower tax year. Second thing that you can do is it might be the best time in a long time to do a Roth conversion. So you may or may not know, but you can convert your traditional IRA dollars into Roth dollars. And Roth dollars come out of that account when you're in retirement to you tax-free, when taxes are likely to be higher versus your traditional IRA dollars that will be taxed at a potentially higher rate. So executing a Roth conversion strategy this year when taxes are lower than they're likely going to be next year, particularly for our income earners, might be a good option. Many of my clients are taking advantage of this strategy, but they do have substantial consequences if not executed properly. So be sure to seek advice before doing a Roth conversion. The third might be a great time to consider your estate plan and the taxes associated with it. Estate and gift tax exemptions went up 11 to 11.7 million this year per individual. That's a pretty high threshold. Many people watching this video will never have to worry about accumulating and leaving behind $11.7 million. But as early as 2001, the federal estate tax exemption was only $675,000, which many more Americans were affected by. The Biden proposal isn't quite that aggressive, reducing it to $675,000, but somewhere in between. And so if you're somewhat approaching that potential estate tax exemption limit, now would be a really great time to do some pre-planning on your estate plan in order to help mitigate the effect of that burdensome tax bill on your estate and the estate's beneficiaries in the future. Lastly, the deductibility of 401k plans could change with the new tax proposal. So if you're a high income earner, especially, maxing out your deductible contributions this year might be a good option. You can also talk to a financial professional about the benefits of contributing to a Roth 401k if it's available at your company. While you don't get a tax deduction today on Roth 401k contributions, you're somewhat insulated from tax hikes in the future. Until the United States gets their spending under control, it's unlikely that the proposed 2022 tax changes are going to be the last. Bottom line, tax laws are in a constant state of flux, and we don't know when the rules will change or what they'll look like once Congress gets done haggling, but we can take some proactive steps now. Part of my job is to help you stay on top of the rules and maximize your opportunities every year. If you have any questions about what I've discussed today in this video, any particular questions that have come to mind that I haven't discussed in this video, and you'd like to speak personally about what's going on in your personal financial situation, Please use the form below to send me a message, and I will respond to you personally and promptly. Thanks for your time, and look forward to chatting with you soon.